It's a mind, it's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading.
What is the TP family, and how do you become part of it? Don't worry, if you're watching this, you're already part of the TP family. Now, before you ask, no, it's not take profit. That's the first thing traders think, right? TP stands for trading psychology. When Cliff Cheqona created this community, he didn't want to make it all about himself. He wanted to create a space for traders built around a simple truth. Most traders lose because their mindset isn't ready for success. So, what's the TP family? It's not a company. It's not an organization. It's a movement of traders who are done chasing shortcuts, done trading emotionally, and done feeling like they're alone in this journey. Now, let me be clear. We're not here to build another Telegram or Discord group. You don't need more chats or endless notifications. All you have to do is follow our content on YouTube, TikTok, and Instagram. That's where we deliver everything. Masterclasses, podcast clips, mindset tips, and even those hard truths no one else will tell you about trading. Our vision for 2025 is simple: education. We teach traders what really matters, not just strategies, but the mindset behind them. Through our TP Masterclass, podcasts, and content, we make sure traders know how to manage themselves first. Community. The TP family is all about connection, but instead of chat rooms, we meet through meaningful content that actually helps you grow. Tools. We're creating journals, simulations, and practical resources to help you track your progress and improve your trading behavior. The TP family is here to change the way traders think forever. We're not about quick wins. We're about creating strong, resilient, unstoppable traders. Welcome to the movement. Let's make 2025 the year you fix your mind and fix your trading.
I think big, I dream big, I trade smart. My thoughts align with wealth, success, and abundance. I deserve success because I work for it and stay disciplined. I let it go of doubt. I let go of fear. My mind is renewed every day with wisdom and strength. I focus on solutions, not problems. I attract profitable trades and opportunities. I am a successful, focused, and profitable trader. I am unstoppable and I am victorious. I am grateful for every opportunity to trade and grow. I give thanks for my progress, my lessons, and my success. I attract prosperity and I steward it wisely. Every day, I am becoming a better trader. My trading provides freedom and abundance. I speak life, blessings, and success into my trading journey. I am grateful for the wisdom to manage risk and profit. I celebrate my growth and resilience. My heart is full of gratitude. My mind is at peace. I am prosperous in my thoughts, my trades, and my life.
It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game.
Hi, TP family. Hello, everyone. Welcome to another Saturday for the live session here on YouTube Live. My name is Tennyson Shells, and welcome to the Trading Psychology Masterclass right here on YouTube. Today, we are not just going to be talking about trading. We are going to be talking about a whole lot more than just trading. We are here to learn how to think better, how to trade better and how to make better decisions in our personal life and also in our trading lives. Here at Cheqona, we believe that wisdom and discipline and faith are the keys to success, both in the markets and in your personal life. And here, our goal is to help you develop the right mindset and build confidence and trade with much more clarity than you came before you came on the live session today. So that you can one day achieve financial freedom and personal growth in your life. So here's what is coming up today. Today we'll be talking about trading psychology. We'll be talking about how to find your edge in trading and a quick look at the charts if there will be one. And we'll go into our book summary of the month, which is the psychology of money. We'll be speaking about chapter 10 of the psychology of money. So make sure to grab your pen and your notebook. And if you have not already done so, please do share the link with someone that will be able to benefit from this live stream here on YouTube for free. Okay, so yeah, now can I know where everyone is tuning in from? And also, can you let me know what you learned from our last week's session so that we'll be able to discuss it? Hello, everyone. Hi. We have Larry from Kenya. Hello. We have Canada, Rwanda, Greece. Hi. We have South Africa, Thailand. Hi. Angola, Simon from Angola, Cameroon. Hello. We are always global. For the TP Masterclass, we have South Sudan, Ghana, Netherlands. Hello. Hi. What did everyone learn from last week's masterclass that we had? Oh, we have Germany, we have UK, we have Abuja, and we have the UAE in the house. Hello, everyone. Can I know what everyone learned last week from the session that we did? Oh, this is your first time here on the TP Masterclass. Hello, welcome from Angola, Lagos, Nigeria, Uganda. Hello, everyone. First time for Henry as well. Welcome. Gonna have a great time today. Namibia, hello. Hi. Can I know what everyone learned from last week's trading masterclass? What is trading psychology? Yeah, we did go into depth of what trading psychology really is. But what did you learn from it? Did you get the full understanding of what trading psychology is? For you to be able to go like, okay, like I now know what trading psychology is, so that you can start applying it to your trading life. Emotional awareness, yeah, we did learn that emotions are not bad, but it's good to be emotional intelligent, yeah, so that aware of your emotions. Yeah, Importance of structure. Yeah. Okay, so that is what some people noted from last week's trading psychology masterclass. So without any further talking, I'm just gonna say bye for now, and then let's continue with the TP masterclass. Thank you,
It's a
everyone.
mind game. You heard me. Trading is a mind game. Fiction mind, fiction trading. Fiction mind, fiction trading. It's a mind game. You heard me. Trading is a mind game. Fiction mind, fiction trading. Fiction mind, fiction trading. It's a
All right. Hello, everyone. Once again, welcome to the TP Masterclass. My name is Willis Aromi, a trader for the past 4.5 years, somebody who loves to read, and I'll be leading today's segment for the book summary. If you didn't guess it, The Psychology of Money. We're going to be going over chapter 10. All right. There are a lot of lessons that we're going to go through in this particular segment. I'm super excited to go through that with you. Last week, we went over chapter 9. Can anybody remember, in fact, chapter 9, anything that we may have gone over last week? Anybody in the chat, you can just drop your comments in the chat. I know you guys did an incredible job last week. And in fact, just summarizing some of the things that you learned. But I just want to see if you guys are still following. Anybody can remember from chapter 9 what we went over? Let's have a look. Man in the car paradox. What about it? What's happening, Amadou? Hope you're good. Hope you're good. Absolutely. Wealth is what we don't see. It's in the habits. It's in the things that we think wealthy people do visibly. But in fact, it's the things that we do not see. That's in fact the things that make a wealthy person maintain their wealth. All right. So without further ado, we're going to be going into chapter 10. It's quite an interesting one, but you guys, if you're following, you can see that the title of chapter 10 is about saving money. Okay. It sounds pretty straightforward, but once we go into it, you're going to see that it is straightforward, but it requires a particular type of person to be able to just do the simple thing, which is save money. All right. So without further ado, I'm just going to share my screen so you guys can see what we're going through. All right. Just drop some number ones if you guys can see my screen, and we'll continue from there. Perfect. Can you guys still see my screen? If not, but let me know if you can. Brilliant. All right. So I'm going to start off this particular segment with this comment. Okay. It's that wealth isn't just about high earnings. It's not about great returns. It's in fact the ability to have a high savings rate. We're going to go deeper into this. But the most important thing to take out of this is this. Not only do you have a high savings rate, but it gives you the flexibility, the security, and the ability to take advantage of opportunities. You see, here's the interesting thing, is that too many of us, including myself, we focus a lot about increasing our level of activity, productivity, most importantly, increasing our income, especially through trading. But we overlook the simple concept of putting money aside. Now, you might say, put money aside for a rainy day, as we say here in the UK. We put money aside for a rainy day. Or in case of emergency, have an emergency fund, right? But I promise you, although we're talking about money, it gets even deeper than that. And I hope you guys are able to follow along with this, okay? I'm going to give you a scenario. So let's just assume that we have two individuals. Let's just call them person A and person B. So person A, he earns about $100,000. Let me make sure I remember to use dollars, because I love using pounds simply because I'm from the UK. It makes no difference. But let's just say person A, he earns $100,000 per year. Okay, he has a great lifestyle, an expensive lifestyle. He has high expenses. Somebody who I would like to describe that his lifestyle dictates his money. Okay, he spends a lot of money throughout the years. Let's just call it expenses, lifestyle, and at the end of the year, he maybe just has something like £5,000 or $5,000 at the end of it. Okay, in comparison to person B, he earns half of what person A earns at $50,000 per year. He puts away around about 15,000 into savings and maybe 5,000 into his own personal development and education as a trader. That's very important. Who do you think is going to be better off? Let's just forget about all of the little details that I've given there in terms of person A and person B. In terms of just a saving perspective, who do you believe is better off? Is it person A or is it going to be person B? You can drop the comments in the chat. Is it going to be person A that earns 100,000 per year, or is it going to be person B who earns just 50,000 per year? Still a lot of money, but who's going to be better off in terms of saving money? So far, we have person B. We have a lot of people saying person B. And if you say person A, then you can just drop a comment as to why. There's nothing wrong with that. But I guess the reason why we would definitely assume, and why I believe person B is better off, is number one, they have a better savings rate. They're able, even with their small income, understand the principle of setting money aside. In comparison to person A, who they have a high income, but guess what? Their income diminishes by the end of the year and they depend on themselves in order to make the same amount of money the following year to do the exact same thing. And eventually, guess what? It's usually people like person A, whenever they're in a tough situation, they borrow from people like person B, who has a higher reserve of income. So then you might ask, okay, then why is it that person A has a lot more money and just doesn't save? It's not that simple. Why? Because if it was that simple, I believe you me, every single person would be doing it. The majority of us would be wealthy. Now, I want to highlight something, because it's not to say that none of us will become wealthy. Believe me, there's probably some people in the chat who probably doing better than I am. I'm humble enough to admit. However, the reason why 100% of people are not doing this is because it doesn't just require you to say, oh, great, I'm just going to put some money away. No. It requires a shift in mindset. It requires for you to shift your mindset. Just save. Just put money away. Okay? You don't need a specific reason to save. You don't. Just save, because opportunities and challenges, they're going to come, and they come when you least expect it. I'm a testament to it. Okay? Being able to live below your means is a financial superpower when it comes to the concept of saving money. Just like person A, he lives at or above his means, meaning that even just to afford even education in himself or save in case of emergencies. And guess what? If he doesn't make the money and if he doesn't work, where is the 100,000 going to come from the following year or the year after that? In comparison to person B, he has freedom, because although he's not earning a high income, maybe his expenses are a lot lower, but guess what? The rate of which he's saving is a lot better than person A. Okay. Flexibility, freedom. We've spoken about this quite gently in the previous slide. But flexibility and freedom is one of the biggest benefits, hands down, biggest benefits when it comes to the ability to buy, it's one of the biggest benefits when it comes to having flexibility. Let me just rephrase that just to clarify what I'm saying. When it comes to saving money, that gives you flexibility and freedom to make better choices. Okay. I hope you guys are standing with me on this one. Because now you have the ability to invest in yourself, education, invest into your trading account. In comparison to the person who decides, I've got my last $1,000 or £1,000, let me deposit that into my trading account and hope for the best. In comparison to somebody who decides to think long term and decide, hey, you know what, this £1,000, I can grow this to maybe 10,000 or 20,000 in the space of 2 to 3 months. No, they might just decide, hey, look, whether I like it or not, this is just only going to grow as long as I follow the rules. The difference is, I think somebody mentioned it in the chat. Person B decides to invest in longevity. Longevity. So they're thinking long term. And this is how we're now going to dive even deeper into this particular concept. Of course, we're talking about the psychology of money. But when it comes to just saving, there's actually a lot more that you can actually save than just money. But it requires that particular mindset to be able to save the money in the first place. So you guys follow me so far. I love the last thing that Amadou has just mentioned in the chat. He says, you can also buy time. You can also buy time. Absolutely. I totally agree with that. You can buy time. So this is a question for you. Do you have a specific goal in mind? Or is it just so that you can have future options or options to buy more things? That's just a question that you should think about. So I want to hear from everybody in the chat. This is quite vital. Are there other things that you can save? And if there are, what are they? You can save money. Yes. You can buy time. That's a form of saving time. But what are other things that you can actually save? You can save freedom. Okay. You can save energy. Anything else? You can save time. Save my retirement. Okay. Okay. So in other words, it's more about time. Time, energy. Those are good ones. Save your health. That's an interesting one. I like that. And freedom again. You can keep the comments coming, guys. But when it comes to the concept of wealth, okay, because of course, at the end of the day, we are all traders, assuming that we are all traders. We want to become successful. We want to rewire our minds, fix our minds so that we can actually fix our trading. Yes. But when it comes to the concept of wealth and saving money, in fact, this is how a lot of people, a lot of wealthy people, should I say, this is how they get wealthy. They don't just depend on their income producing activities, as most people would say. But in fact, they have those skills, but they also have the ability to save. Remember in the beginning, I said that it requires a certain type of person, a certain mind shift, a change of mindset in order for you to save. It absolutely does. Why? Because many of you have said time. This concept of time, I believe, is way more powerful in comparison to money. Let's just say, for instance, I'm going to give you a sort of scenario A, scenario B again, but slightly different. We have person number one who, in fact, two individuals are going to the exact same destination. And let's just say this destination is going to, they're going to spend about, I don't know the exact time. Let's just say they'll spend about 2 hours getting to this exact destination, and it will be 100 miles. Okay. Now, both individuals fill up their car with a full tank, and it should go the distance, leaving just some extra reserves. Okay. However, person number one they're driving pretty narrow on a straight road that continues straight for the duration of the 100 miles. And in fact, they get there on time, so much so that they have some time to spare to freshen up and go to the toilet, maybe meet a few people before they attend the event or the meeting. In comparison to person B or the second person, they have the exact same petrol in their tank. The difference is this individual decides to think that they're smart. They speed up in narrow roads, or they try to take the back roads. They think that they've got another way to get there even quicker instead of following the straight and narrow path. Okay. Somehow, for some reason, their fuel is a lot lower, and they might just need to top up just a few miles before their destination. Now, this is it's an example that you might imagine now, but this is sometimes a reality and a fact, because oftentimes I can speak for myself. When driving, instead of taking a path that is pretty straightforward, or in fact, the path that the navigation decides to take you in that particular moment, there's an actual reason for that. But the mistake that's being made sometimes is this. I know this particular road. I don't know why they are. The arrogance begins to speak instead of the humility. The arrogance tells you, I don't know why this road is taking me this path. I should be going this way instead. If I go this way, I believe I will avoid all the traffic currently. I will go through the back roads, and I will end up in the exact same destination, even earlier than person A. And it doesn't happen. I love Amadou. He says, especially in the UK. Absolutely, especially in the UK. Totally agree. And if whoever's not in the UK, you guys who are in the UK, you know exactly what I'm referring to, especially in London. Right? So the point is this. We're talking about saving money, but you can also save time. But it requires a certain person who decides to change their mindset in order to be able to save money. Yes, we're talking about physically being able to just save. But once you understand the benefits of what comes with just saving or saving money, it becomes more than just saving money. Now, here are some other things that you can even save. Let me give you a few pointers here. And I love the fact that we've already said you can save time. Okay. But you can definitely save time, number one. And please make sure you write these factors down, because these are quite vital. You can definitely save time. You can save energy, but it depends on the type of energy we're referring to. Let's just call it this. You can save health and you can save energy. What does that look like? Somebody who decides, I need as much energy as possible for my presentation tomorrow. So guess what I'm going to do? I'm not going to sleep very late. I'm going to prepare beforehand. Yes. I'm going to have some sort of balanced diet. The way I eat and the way I'm going to preserve my energy is all factors and results based on the lifestyle that I live before the actual meeting of that event. So you can save, yes, your health, you can save your energy. What are other things that you can save? This should be probably, in my opinion, I'm going to be very biased here, but the most important one for this current session that we're doing right now. You can save knowledge and you can save information. I remember many years ago when I started my journey in entrepreneurship, there was always somebody saying the same comment. It's either one person or a different person. And they always said this: what you write down, you don't need to remember. it sounds quite silly. In fact, it sounded quite stupid to begin with for me. It's like, why should I not try to remember something? Isn't it that the most intelligent person in the world should look smart and be smart, remember everything, be a genius, right? But years later, I later on found out what that basically means is the most, I'd say, the world-class speakers in the world, the most important people, the people who perform excellently, they don't just rely on head knowledge. In fact, it's further from the truth. The information that we're referring to in terms of saving knowledge and information, this comes down to things such as notes, preparation. I really highly respect people who read and they study the book, something that I'm learning to do, especially this year. Effectively, I've done it before, but effectively this year. I don't just want to read the book. I don't just want to read things, but in fact, how I know that I can understand something is the ability to just study the book, take notes, and go over the information again and again and again. So saving information. How are ways that you can save information? By writing down what you hear. Okay. Here's a funny one. This is quite completely off topic here, but when it comes to saving information, please drop in the chat if you are a person who has many different passwords for a lot of things. Okay. You have many different passwords, and somehow we begin to remember all of the passwords that we need for our iPhones, our Samsungs, our iPad devices, our MacBooks. If you're somebody that works in the corporate world, or you work working from home, or you have a particular password you just cannot remember, and you're scratching your head for 10 minutes just to find a particular password for something. So passwords is something that you can save as well. So you can save knowledge and you can save information. And this is why I said it requires a certain mindset to change from the mentality that we had before to the mentality that we want in terms of saving money. It requires somebody to be somewhat efficient with the things that they have in hand: money, time, resources, information. Okay, health. So once you understand that these are important factors to be able to preserve and to save, most importantly, to prioritize effectively, then saving money should never really be a burden for you. Something that I'm learning even right now as I'm speaking to you. I'm going to give you a last one, but saving time. So when it comes to saving time, what are some things that you can do to save time? Pretty simple. Plan effectively. Don't just leave your house and not plan your journey. No, plan effectively. Plan how long it will take you to get to your destination. Okay. Plan what time you will leave. Give yourself a gap of 30 minutes to say, my timing, or the time I'm going to reach this destination is going to be 30 minutes before the event. Not on time. No, 30 minutes before the event, or even 1 hour before the event. How to maximize on your time effectively. Oftentimes we are so consumed with social media. I'm somebody who can very openly admit I don't often spend a lot of time on social media. In the last recent years, oftentimes I might just remove social media because I want to focus on my growth. Specifically when it comes to the idea of trading, is something that I really did often in the last 4 years. Not because I don't want to be on social media, not because I'm better than anybody, but I made a commitment and a decision to myself to reduce the distractions that might cause me to delay my progress in a particular field, or in trading in particular. Focus time. That's how I want to save my time. We're talking here about the psychology of money. Yes. So then when it comes to wealth, the ability to save comes with humility, right? and self-control. It's not just about intelligence or smart work. Because if that was just the case, then every single person is smart enough to say, yeah, when the money comes, we lie to ourselves oftentimes. When the money comes, definitely I'll send it to so-and-so. Or when the money comes, I'll put it away. Sometimes it's not the case. Sometimes something happens. Something happens and the money just gets swallowed up in something, or an emergency, or a family member. These things happen. One thing that might even help you is avoiding, living above your means or having an inflated lifestyle, as we say. Just like person A, who earns double the amount that person B earns, but unfortunately it is very difficult for him to save money. It's difficult because it requires a certain person to humble themselves and say, hey, look, I don't know what the future may hold. Let me save up. Let me invest in my mind. Let me be able to earn more in the future because of the investment in my mind that I'm taking today, because of those choices. Okay, it's not necessarily about just reaching a certain number, okay, but it's about your time and your choices, just like what we've discussed here today. So now when it comes to the concept of flexibility and opportunities and time, here's something that will help you, because when you have savings, it never becomes an issue for you to take on board opportunity. Let's just focus on trading just for a sec. After all, this is the TP Masterclass. We're focusing on how to fix your mind and fix your trading, correct? Right? So if a trader wants to make or go from 4 figures to 5 figures to 6 figures along that journey or that path particularly, compare the difference between somebody who has their last £1,000 or $1,000, says, I need to hit 1,000K. It doesn't even matter if, this individual decides I'm going to make 100K or over leverage, in comparison to somebody who decides, hey, look, I've got some savings. I can afford to lose this £1,000, say something goes wrong. The person who has a higher savings can afford to take more of a risk. Not to say that they will be reckless with the risk. However, they're in a more comfortable position where they are no longer thinking about money and the money they need to make. Okay? So the flexibility and the choices. So focus on freedom when it comes to your goals. Flexibility, not just increasing your income, but focus on goals such as freedom and things that would allow you to become more comfortable when it comes to your choices. Here are the final things that I'm going to mention before we round off and go to the next segment, is this: that saving money is the simplest form of building wealth, setting money aside. That's number one. Number two, true wealth isn't just about money, but it's about having the flexibility of choices. We've already mentioned it. There's money involved, saving time, saving your health, saving energy, saving notes, not having to look like or think you need to be a genius to become successful. No. But remaining a student and understanding that oftentimes people, they write notes, they retain information on paper, they go over it over and over and over again in order for them to, develop into the mentor that they're trying to emulate, and so on and so forth. Okay. And spend less than you earn, which is the key to long-term financial security and freedom. Okay. Cut down on some unnecessary expenses this week. That's your task. That's your homework. That's a challenge for me, and that's a challenge for you. Okay. Think about something that might have cost you, that's costing you even now. It might not even be the biggest thing in the world. It might even just be, I listen to music that doesn't necessarily benefit me, and I pay for a subscription every single month. Let me utilize that money to reinvest in something else, or even most importantly, put that away for 3 to 6 months and see what happens. All right. So guys, once again, this was the book summary of chapter 10 in Saving Money. It's more than just about putting money aside, but it requires a certain mind to be able to just save. All right. I hope you guys got some value from today's segment. My name is Willis Aromi, speaking about the psychology of money, and I hope to see you guys next week. Peace out.
I think big, I dream big, I trade smart. My thoughts align with wealth, success, and abundance. I deserve success because I work for it and stay disciplined. I let it go of doubt, I let go of fear. My mind is renewed every day with wisdom and strength. I focus on solutions, not problems. I attract profitable trades and opportunities. I am a successful, focused, and profitable trader. I am unstoppable and I am victorious. I am grateful for every opportunity to trade and grow. I give thanks for my progress, my lessons, and my success. I attract prosperity and I steward it wisely. Every day, I am becoming a better trader. My trading provides freedom and abundance. I speak life, blessings, and success into my trading journey. I am grateful for the wisdom to manage risk and profit. I celebrate my growth and resilience. My heart is full of gratitude. My mind is at peace.
It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading.
Hello, wonderful people out there. What's going on, everybody? It's a wonderful weekend once again, and I welcome you all to the TP family. It's great to have you all on here. If you can hear me, just give me some ones in the chat area. Let me just know that you can hear me perfectly. Can you hear me? Can you hear me? Give me some fire. Give me some ones. Give me some fire. Let me ginger you guys a little bit. That's right. That's right. All right. So in the background, I could see that there are a lot of people who are, like new to TP family, first timers, and then all. I just want to welcome you all to the TP family. Over here, we are a family, as the name suggests. We are a family. We are together, right? Today, I'm bringing you something really interesting. Actually, it's a continuation of what we were doing last week. And guess what? I had a lot of messages within the week. I've not been able to answer all of you. But then, at least today, what I'm going to treat is going to reply the messages that you sent me. Most of the questions that, you sent me in there. And I'm glad to be on here. Now, let's get in on the chat. I'm sharing my screen now, as I always do. All right. And then let's go. Okay. So if you're looking at this, this is basically my chart. You remember last week when I was talking about the fact that gold hit 3,000. Now, a lot of you did not understand the magnitude of gold hitting 3,000. But let me tell you this. I told you guys, last year, January, gold was sitting at $2,000 per ounce. And this year, March, gold is sitting at $3,000 per ounce of gold. Do you know how much increment that is? That is 50% on the price of gold. The value of gold per ounce has increased by 50%. Guys, that is insane for just 12 months into the year. And that is why I tell you guys, there are some things that you need to really understand when it comes to the chart. If it is gold you are trading, make sure you know the pair by heart. If it is GBP USD you are trading, know the pair GBP USD. If it is Euro USD you are trading, know the Euro USD, right? Make sure you know the pair you are trading, know the asset that you are trading, whatever it is that you are trading, right? Today, I'm not even going to be talking about the chart so much. I'm taking you away from the chart and taking you to my slide and then show you exactly what I am planning out here, right? So I started trading somewhere around 8 years, a little bit, beyond 8 years ago, right? I was introduced into trading and it has been the best, thing that has ever happened to me. Now, when I came into this space, guess what? The first 5 years of trading was actually chaff. When someone says chaff, it means it was, I wouldn't necessarily say useless, but what I learned on the market has proven itself to be useless so far, the first 5 years. My profitability journey started somewhere around 3 years ago, and it was only when I sat down and identified the key performance indicators that would make me profitable in this journey. Now, I realized that these are the areas that I needed to focus on as a trader, and then I'll neglect every single noise in the market. So take your pens, take your notepads, and then pen this down. First of all, I was looking forward to seeing the market direction. I wanted to be able to understand why price moves in what direction it is going in at every particular point in time. And then I also wanted to be able to follow market when it was actually in motion towards that direction, which means that I needed to understand how market was actually moving towards where it was going. Then it brings me to what? Market structure, whereby if price is going towards the upside, how exactly is price traveling towards that particular direction, right? If price is going towards the downside, how exactly is price traveling towards the downside? It makes sense, right? Now, after structure, understanding structure, which there are a lot of components in there, which I started last week, we come on to market swing points. Now, knowing the structure, we are now looking forward to know if price is moving towards the upside, where did it start from and where is it going? Or what is the probability of it resting off at a particular area? I needed to understand that as well, right? And guess what? Until I understood these things, trust me, profitability was far from Kema. Very, very far from Kema, right? Now, after mapping out, market swing points, the next thing was for me to be able to map out the great transaction zones. And that is exactly what we are going to be talking about, mapping great transaction zones, right, today. Now, after great transaction zones, we talk about point of interest in those transaction zones. Then we talk about your entry criteria. What is your entry criteria as a trader? Are you a risk entry trader? Are you a confirmed entry trader? If you're a risk entry, where do you jump in on the market? If you're a confirmed entry trader, what do you see before you jump in on the market? I hope you understand. And frankly speaking, if you are a confirmed entry trader, are you sure your criteria is in place? Are you sure you know your entry criteria? Are you sure you have mapped it out? Are you sure it's a mechanical process that you follow every time you are on the chart? All this is to say that you have to become like a machine, mapping out certain things that you need to follow in order to pick a trade on the market, and never, or rarely, let me not use never, right? Rarely going against those rules. That is what penned me on the profitability journey that I've been on in the past 3 years. And guess what? I actually feed myself, feed everybody around me with trading, and it has been awesome, right? Now, the next thing that I realized, and the biggest thing of all, was to what? Master psychology. Now, have you ever wondered why someone will give you a signal? 2 hours later, they will come in and tell you 200 pips hit, 300 pips hit, but you were not able to stay in there. You probably took 20 pips off. You probably took 30 pips off. And I know that a lot of you have that problem. You are in signal pages that at the end of the day, they will tell you, oh, 300. But then how many people were able to stay in the trade until that 300 pips hit? So then when we come to the background or the base or the fundamentals of that particular situation, right? Then we talk about the fact that there is something that is missing in that particular area of picking trades from other people, or even picking trades on your own and never being able to see that particular trade materialize. Some of you take profits at a short point rather than losses. You see your losses running and then you tell yourself, no, it will come back. But you see your profits running and you are like, no, it's not going to continue, right? Why does that happen? Why is it that when you're going in profit, you tell yourself, oh, it cannot, okay, I anticipated that it will hit, 3,000. Then your mind begins to tell you, oh, wouldn't it hit 3,000? Okay, maybe it's not going to hit 3,000, right? But then if you are in a loss and it's going towards the downside, your mind is telling you that, oh, it will come back, and then you stay in that trade. And that is why a lot of people have blown your account on the market, right? And lost some significant amount of money on the market. So mastery in psychology was what? A very, very key thing. And once I pick these things and then what, map them out, I realized that my profitability journey started, and it has never been the same for me. Trust me, it has never been the same for me. I'm being truthful. So last week we started something very interesting, and this week I'm just bringing you into this area, right? I was asking you a question last week, and then I stated that, have you wondered why, even if market is in a bullish direction, you can see market going buy, but only you come to buy, and then, you know, like you hit SL, but at the end of the day, guess what? It still goes in a buy. And then you're asking yourself, why? Like, are the market makers watching me? I know that 50% of traders have asked themselves this question, like, oh, I'm being watched. No, it's a manipulation, right? What many people call manipulation is sheer, you know, like missing information in their criteria. And also, let me add this, there is no secret, there's only privileged information. If you do not know, it means you are not in a circle that ought to know. It's as simple as that. If you have to know, you have to be in a certain circle or in a certain area to be able to know and understand it, right? At the end of the day, what you realize is that, okay, there are strong areas in the market and there are weak areas in the market, whereby even if market is pushing towards the upside like that, around this area, when market gets into this particular region, you would realize that, okay, market, if I buy around this area, market is going to pull back and then push towards the upside. So yours is for you to be able to understand that even in a bullish market, there are areas where market will pull back, and you don't want to find yourself in those areas where market is about to pull back. And those are what we call the weak buy areas. How we get it? And when it's in a sell market, even though market is coming towards the downside, you can sell at an area and still take a big loss. Why? Because you are selling at weak sell areas. And so we, as you know, like a great trader, you need to make sure that those strong regions are your focus point for picking a trade in the market. Now, when it comes to Cheqona, how does Cheqona look into the market and identify these great trading zones? First of all, right, I'm just going to give you the criteria, one of the criteria, right? And that is mapping out great transaction zones. Now, what I'm basically going to tell you around this area is this, guys. Take the market, right? I've always been telling you guys, take the market as your normal market area. A transaction is what is happening in the market, right? In the market, basically, we are making transactions. That's what is you know, like supposed to be, right? Creating transactions. How does a transaction come to be in play? Transaction is made up of what? Two different parties. Who are the parties in a transaction? We have the buyer and we have the seller. It means that if the seller is available but the buyer is not available, a transaction cannot be in play. And if the buyer is available and the seller is not available, a transaction cannot be in play. These two individuals must simultaneously be in agreement to be able to make a transaction what? And the exchange is what will make the transaction stand. As simple as that. So think of it as our market area where a buyer goes into the market. Now, that buyer who is going into the market has a different mentality from the seller who is already in the market. Take note of this. The seller who is in the market probably bought this Rubik's Cube. This is called a Rubik's Cube, right? I love it. The seller bought this at 1,000, right? And they want to sell it for 1,200, right? Now, the buyer goes into the market knowing that, okay, so probably this might cost maybe 1,100, not knowing what they are going to face. But they go into the market and they realize that, oh, it's 1,200. And so they must decide, am I going to get it at 1,200 or I can still bargain? The buyer always has a mentality of bargaining. Let me bargain so that I can get a lesser price, or let me see if I can get a lesser price. The seller, on the other hand, always wants to make profit. And that is what brings about what we call premium and discount price levels. The buyer always wants to be able to be associated within that discount price level. And the seller always wants to be in the premium price level, not making a loss, at least break even, or a little profit will make the seller happy, right? But break even, yeah, well, that's good. I bought it for 1,000. I conveyed it to this place. So transportation added to it will probably be 1,100. Basically, 1,100 is my total cost, right? So I shouldn't sell it beneath 1,100. If I sell it beneath 1,100, I have made a loss. So that is the seller's mentality, which means that the seller has a zone where they are looking to sell in on the market, and the buyer also has a zone where they are looking to buy from in the market. And so if a buyer finds themselves in a seller zone where, like it is too much towards the high side, it means they have been cheated. It means they have made a loss. And if a seller finds themselves too low beneath into the discount price or into the area of a buy region, what has happened? They have relatively also made a what? A loss. It's as simple as that. So bringing that analogy into the market, what you relatively see is we have price moving from a low level and shooting upward to a high level. Then we have a pullback, right? That's basic market structure. I showed you the last time, right? We have price push up, then push down in order to push up, then push down in order to push up and then push down. So now in one instance where we have price push down and price push up, the idea is because we have seen price going towards the upside, we are anticipating that price will do as it has already been doing, pull back and then continue towards the upside, right? Basically, that's what we have in mind. Now, if price is pulling back, then where is price coming to? So if it is a buy market, I am in the position of a what? A buyer, whereby I'm looking for price to come lower, discount level. That is why I argue with people who like to enter the market at high areas like this. When market is at its apex, looking forward to turn around. I'll be getting. If you want to get the great swings in the market, you have to be patient enough to wait for market to bring you into the low areas where you are safe enough to what? Buy from. Now, having said that, I'm not necessarily saying you cannot buy from this area. You know, Kema says don't buy from this area. Of course, Kema says in his criteria, he doesn't buy from this area, right? He waits until market comes at least 50% into the what? Swing high and swing low position, which I call this area the equilibrium. Equilibrium, if you did economics, equilibrium simply is a middle ground, right? After crossing that middle ground into the lower level or lower perspective, an individual trader can start looking out for an entry towards the upside, because now we are in an area comfortable enough for a buyer to jump in. That is Kema's criteria. Now, someone can actually enter the market from this high area, right? And it is all about how deep pocketed that individual is. So let me use myself and Cliff as an example. Myself and Cliff go into the market, and Cliff goes, like into the market first. I go into the market later, but we are going to buy the same product. What is the product? We want to buy an iPhone 16, right? When we get into the market, Clifford asks for, like iPhone 16, and they tell Clifford, oh, it is $2,000. Clifford buys it. Guess what? Because he's deep pocketed, he has money, right? The guy is loaded, right? And then Kema goes into the market and then says, like, how much is, like this iPhone 16? They tell Kema it is $2,000. Kema says, $2,000? No, I'm not going to buy it at $2,000. Can you come down a little bit? And then this person says, okay, 1,800. I'm like, no. What I came into the market with is 1,200. That is what I'm looking to purchase at. If you can give it to me, that's fine. Now, here's the disadvantage in it. I can bargain, and that 1,200 will not be able to purchase iPhone 16. So I'll be asked to what? Go away with my 1,200. Do you know what implication has happened? It means you have scrutinized the chart so much that you were looking for price to come at a lower price level, but price wasn't able to reach there. I'll be getting, and price took off towards the upside. It means you missed your entry. You missed the transaction. I hope you understand that, right? But you can bargain, and when it gets to maybe 1,400, the individual says, I'm not going to go lower. And so you have to make the decision. With this consolidation up and down that I'm doing between the seller, let me just go in and make sure that I put my stop loss beneath the area where it needs to be. Now, this is another principle. The stop loss needs to be where the stop loss needs to be, not where you want it to be. If you put the stop loss where you want it to be, market will take you out and still go your direction, right? So at the end of the day, you put the stop loss where it needs to be and then look for price will take you up towards the upside. Now, what has happened? What has happened is I bought price coming towards the downside. Clifford probably bought around this area, right? And put his stop loss all the way here. He's deep pocketed. I waited, because I'm not so deep pocketed. I waited for price to keep on dropping and dropping for me to be able to get it somewhere here. Guess what? I put my stop loss where it needs to be. Now, at the end of the day, when price takes off, we all make profit, right? Because price is relatively going towards the upside. But at the end of the day, what happens is, because I'm at a lower price level, I will see earlier profit. Because now, when it comes to the point where we ought to send out that particular phone, I am going to be at 1,400. Cliff is going to be at 1,200. It means from 1,400 to $2,000, that is $600 profit before Clifford will even start seeing profit in the market. I'll be getting. So at the end of the day, that is the kind of ideology that I make, like most of the people that I mentor see the market as. See the market just like the market that you are in there. And if you are in a position of a seller or you are in the position of a buyer, you need to have a certain kind of mindset. And that mindset is what will carry you along. If you're a seller, then once you are looking at the market from this area, you know that, okay, the whole trend is a buy trend. Around these areas is what? Is a weak buy region. Therefore, if I want to pick a sell, this is probably the area where I need to pick a sell. But I need to also have in mind that that sell is a short-term sell that is rather bringing me into my discount price level, into my buy region, into my selected buy area for me to start looking out for confirmations for my buys towards the upside. I'll be getting. Up to this point, if you are feeling it, give me some fire in there. Give me some fire. Give me some fire. Give me some fire. Give me some fire. Let me know you are following. Let me know I'm not confusing you. I want to see fire before I continue. All right. So some comments in here. Target says, this family is so blessed getting this info for free. Oh my God. Wow. I'm seeing fire from Tennessee. I'm seeing fire from Edward. I'm seeing fire from Target. Charlie, guys, salutes to you all. The fire has even, gingered me a lot. I could go on and on, but you know what? I'll pause here. And then next week, I'll bring you the continuation of this. Peace out to all of you. Have a wonderful upcoming week. Make profits off the market with the knowledge that I'm giving you. It's very essential. Peace out, everybody.
It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading.
I think big, I dream big, I trade smart. My thoughts align with wealth, success, and abundance. I deserve success because I work for it and stay disciplined. I let it go of doubt. I let go of fear. My mind is renewed every day with wisdom and strength. I focus on solutions, not problems. I attract profitable trades and opportunities. I am a successful, focused, and profitable trader. I am unstoppable and I am victorious. I am grateful for every opportunity to trade and grow. I give thanks for my progress, my lessons, and my success. I attract prosperity and I steward it wisely. Every day, I am becoming a better trader. My trading provides freedom and abundance. I speak life, blessings, and success into my trading journey. I am grateful for the wisdom to manage risk and profit. I celebrate my growth and resilience. My heart is full of gratitude. My mind is at peace. I am prosperous in my thoughts, my trades, and my life.
It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game.
ladies and gentlemen, I hope you guys are doing well. Good evening, everyone. I hope you guys are doing well. Before we even go into every single thing, I want us to really go back again and really let the declaration sink into our mind. It is very important that we understand that they all mean something when you come to the masterclass. Let us just basically just really let it sink in again, okay? Let it just sink in. Let it
Think
sink in.
big, I dream big, I trade smart. My thoughts align with wealth, success, and abundance. I deserve success because I work for it and stay disciplined. I let it go of doubt. I let go of fear. My mind is renewed every day with wisdom and strength. I focus on solutions, not problems. I attract profitable trades and opportunities. I am a successful, focused, and profitable trader. I am unstoppable and I am victorious. I am grateful for every opportunity to trade and grow. I give thanks for my progress, my lessons, and my success. I attract prosperity and I steward it wisely. Every day, I am becoming a better trader. My trading provides freedom and abundance. I speak life, blessings, and success into my trading journey. I am grateful for the wisdom to manage risk and profit. I celebrate my growth and resilience. My heart is full of gratitude. My mind is at peace. I am prosperous in my thoughts, my trades, and my life.
Okay. There is a reason why I always want us to be able to really stream this mindset rewiring audio. There is a reason. There is a reason. This year, don't allow negative thoughts to find, how do I put it? Don't let it find a place in your mind. Whether you are a trader, whether you are about to be a trader, whatever the reason may be, do not let negative thoughts find expression in your mind. I refuse to think negative. I refuse to think negative. First of all, I just want to say, if there is any person who is new here, we welcome you to the TP Masterclass. And every single time I'm at the back listening to each and every single person speaking, I said, I hope from the introduction part to the book summary to Kema's part, I hope you guys are understanding what is happening to you. Especially if you are a new trader, that you are becoming one, you will not really understand the level of how much important this structure is for you as an individual. So today I'm going to teach something very, very powerful. I really struggled with today's lesson a little bit. I did. I'm not going to lie to you guys. I really did. At some point, I was like, should I teach this lesson today? Or should I teach the one I wanted to teach before what I'm teaching today? And I truly believe I selected this lesson for today for a reason. What I want you guys to do for me first, I want to just talk about something before we learn today. But as usual, where are you tuning in from? Okay. First TP member from Angola, Cliff, please don't forget to shout out the song for us. No worries. Where are you guys tuning in from? In fact, let me just do the due diligence. Where are you guys tuning in from? Let me know where you're tuning in from right now before we get started. What are you tuning in from? Just let me know. Manchester in the house. Reynolds, interesting name. Reynolds, welcome. We have okay, Malachi. I'm gonna just stick with Malachi. Okay, let's just stick with Malachi. South Africa in the house. We have Elisha from Nigeria. The anointing is in the house. From Cameroon, but live in the UK. Nice to meet you, brother. Then we have some trace from Nigeria in the house. We have Smart Osanhon. Okay, KSA. What is that? KSA. Don't tell me. I'm thinking. KSA. Is it Kumasi? Okay, anyways, I don't know. Just let me know. Cyprus in the house. All right, guys, look. If this is your first time that you are coming into TP family, thank you so much for today. Thank you so much for today, for joining us for today. But let's get right into it. before I introduce my topic for today, I want to tell you guys something very interesting that I've been meditating upon. But before that, if this is your first time that you're joining TP Masterclass, you may be wondering, what is the meaning of TP Masterclass? TP Masterclass simply means Trading Psychology Masterclass. Now, a lot of times when people think of trading, they think about a small portion of it. Okay, very small portion of it, which is I want to make money. That is the overall goal for people. But trading is more than that. I mean, as a business, okay, it's more than that. But in terms of definition, it's simple: buying and selling for the purpose of being profitable. Now, one of the things that I want you to understand is that we have 5 pillars in the TP family as a whole. One of them being TP Masterclass. So you will find out that we have Edge segment, we have the book summary, we have many segments coming up, by the way. But then this is the one that we are trying to focus on. A few reasons, and I'm going to be very super honest with you guys. What you guys are seeing here, it takes dedication, it takes structure, it takes a team. And as a TP family community, we don't want to rush. We don't want to add so many segments we cannot control as a team. And so right now, there is the introduction part where you guys get to be welcomed. Then we have the book summary where you get to be able to understand a couple of few key takeaways from the books. Right now, currently, we are reading Psychology of Money. I'm sure in the next couple of 3 weeks or so, we'll be going to our next book, and I can't wait. Then we have The Edge, brought to you by the highest, my brother, Kema. And at the end of the day, there is a psychology segment. Now, the psychology segment, we talk about deep psychological information that will help you to become a trader. And so if this is your first time, when you come on, just know that you're going to spend approximately 2 hours, 30 minutes tops, for the whole entire body of knowledge to be given to you. So always stay patient so that you can be able to learn a lot from this segment. Now, before I introduce my topic for today, there is something that has been ringing in my heart, and I really want to talk about it today to each and every single person on this masterclass. Please give me your ears for just a few minutes and listen to me carefully now. Just give me your ears and listen to me carefully now. You see, at the end of the day, one of the things that I want to say is this. Couple of few days ago, we were doing back-to-back consultation for every single person in the TP family that was selected for the accountability program. If any of you guys are here on this live stream, just drop I am and let me know. But anyway, so while I was basically, having all these consultations, something really dropped in my mind. Something really dropped in my mind, and I want to talk about it right now. Something really dropped in my mind. I want to share my screen. Give me a second. A lot of traders think that when it comes to trading, this is how they see it. When somebody is going to school to become a medical doctor, that individual does not think they are going to only become a surgeon. The individual truly believes that there is more to the space of medicine they can pursue. Whether it being a surgeon, whether it being a consultant, whether it being anything. You can even become a nurse out of medical school. You can become a lot of things, dentist, whatever, name it all. But then when it comes to trading, a lot of traders think that there is one side to making money from the trading space. They think that the only way that you can become a trader is when you actually click buy and sell. I understand where the concept of that mindset comes from, because that is the only thing that looks like vibe. It looks like you are intelligent, when you're doing that and so on and so forth. But I want to open your eye to something this evening for you to understand something. If you work in the bank or if you work with the bank, you are still dealing in the financial market. As a trader or somebody who is involved in the financial market, there is many things in there for you. There are people who works in the brokerage space. They are part of the financial market, but they don't trade the way probably you trade. There are risk analysts, individuals who have specialized in numbers, and their job is to work with people to make sure there is always proper risk management in any hedge fund, any institution that involves finances. Then we have, listen to this carefully now, it is only in the retail trading space that you will normally not find a lot of career choices, because every single person only wants to click, buy, and sell. And so anytime that you start to talk about any other thing that does not involve you clicking, buy, and sell, people look at you like you are weird. For example, when I started in this industry, sincerely speaking, I started very ignorantly. And you may have heard me saying this before, or you may have come across a video whereby I was talking about the 5 stages every single trader will go through psychologically. I started by saying, number 1, we have what we call the unconscious incompetence. That is a stage where you start that you don't know exactly what it is that you are doing. All right. You are confused because you heard somebody promoting the trade on Instagram, or the person said trading make them something, or they flip $100 to $1,000, so you wanted to do the same. So you didn't start by really understanding how the market works. You came in because you wanted to just make money. So from that stage, you moved on to the conscious incompetence. Now you have become consciously aware that you are incompetent about this industry. You don't know how it works. You don't even understand how the situation even is going to be like for you. Then we have the third stage that we call the aha moment. It is a stage where now you are asking the right question. It is a stage that now you find yourself on courses or master classes like TP Masterclass that previously you wouldn't have even enjoyed it. But now you're like, so trading is not just about clicking buy and sell. So now you want more for your knowledge. Does that make sense? That is the aha moment. Then we have the fourth stage called the the fourth stage is called conscious competence. The conscious competence is where now you are consciously aware that you are now following a system. Then we have the last stage called the unconscious competence. That is the way you drive, you brush your teeth. It is a stage of everything in life when you do it effortlessly. It's called the unconscious competence. Now listen to this carefully now. When I started at the unconscious incompetence stage, I was so ignorant. Ladies and gentlemen, listen to this carefully now. I was so ignorant that I genuinely thought. You see, when you open your MetaQuote app, it doesn't matter whether MT4. Normally, it was MT4 back in the days, MetaTrader 4. And the MT4, I genuinely thought the MetaQuote in 2012. Do you know how I got involved in the financial market? I got involved in the financial market in 2012 because I was going to ask somebody for money. So I went to this friend of mine. I said, bro, I need help. I needed money to register for an examination. I said, I need help. And he didn't have. So he said, I'm sorry, Clay, but I don't have this X amount of money. But have you heard about MetaTrader? That was it. No training, whatever whatsoever. Ignorantly started pursuing this journey. And I was so ignorant to the point that I thought, the MetaQuote demo, not the demo account that you open with your broker, the MetaQuote demo itself. I genuinely thought if I actually make money on top of that demo account, I can actually withdraw and become rich. So normally when you open the MetaQuote demo account, normally you don't choose. So the default, demo account they normally give you is $100,000. So I thought, my God, I have found a secret that is going to change my life. From 2012 to 2013, in 2013, I'll never forget something happened to me. There was the first brokerage account I opened. Currently, right now, as I'm talking to you, the broker company is gone. They collapsed. They actually collapsed with my money in it. So in 2012, I was not profitable because I didn't know what I was doing. In 2013, I called something, the issues of life happened to me. The broker collapsed and they went away. What do I do? Nothing. 2013, 2014, 2015 was my light bulb moment. And I realized in this industry, there is more to this business that I didn't understand. And so the more I kept on going deeper and deeper, I started realizing things the average retail trader will not understand. And that was when my career started changing for me. But listen to me, ladies and gentlemen, even though I started understanding the techniques and the things, there is no strategy right now in this world, in the financial market, as a retail trader that I don't have an idea of. But that didn't still change my life. My life didn't change because I was being emotional all the time. You guys may have heard me say this before. I have prayed over my account. Some people will be laughing, but that was the truth. I'll lay my hands on my account. During the time I was in a drawdown, I will never forget XAU USD. So when I say XAU USD, people say, why don't you just say gold? Because the broker I was trading on, it didn't say gold. It said XAU USD. So I didn't want to forget that picture. I said, God of Abraham, God of Isaac, God of Jacob, please don't let my account blow. Father, I promise you, if you're able to save this account for me, I will genuinely do anything for you. I was promising God. During the prayer session on that account still blue. Ladies and gentlemen, it's still blue. It doesn't matter how much I was ready to speak tongues. The account blew, and I realized in this industry, it's not about emotions. It's not about sentiment. If you don't have the knowledge, you don't have the knowledge. If you don't have the understanding, you don't have the understanding. Nothing changes. So one thing I want you to let you understand is that don't pick pieces of information you want. Trading as a career is a structured body of knowledge. So I like the way when Kema came on, he was showing you guys things you need to study. And there is also a master class we have also done previously about the future you as a trader. You can be able to understand the things you need to study to become equipped with the information needed for your growth. Are you with me? And so when we are teaching things like this, when you are learning every single thing and so on and so forth, you need to understand that we are going somewhere. So if this is your first time that you are coming on this masterclass, the information you are hearing, they may not necessarily sound like trading terminologies, but your trading life and your actual life, they mirror each other. That is why you can trade from Monday to Friday. And if you're having a bad week, the people that you live with in your house, they don't have to ask you what happened. They know you are going through it. If it's a stop loss, it shows on your face. So the stop loss has become a physical manifestation to your actual life. We can see it. So your trading life and your actual life, they mirror each other. So if you are asking me, Cliff, how do I fix my impatient attitude I don't like? If you are impatient in trading, you are impatient in life. If you don't know how to risk well in trading, you don't have a risk attitude, proper risk attitude in life. If you are somebody you are always afraid, what if, that fear is not coming from trading, it's coming from your life. So if you fix your mind, you can fix your trading. If you fix your mind, it can fix your life. So your trading life and your actual life, they mirror each other. Are you with me? Sometimes I need to take time to communicate this information effectively so that people will understand that we are not just here talking and just saying nonsense, but rather it is a structured body of information that you are getting right here. Today, I want to teach something very important. I prepared today. We are about to learn now, so please make sure that you are very, very, very laser focused. Before we even go on, I want you to repeat after yourself. You already know me that words are very powerful. I want you to start repeating to yourself that I will not be distracted. 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 Talk to yourself. Don't think it. You may have heard me say this before, that you don't fight a thought by thinking. You fight a thought by talking. So whether you are in the mood listening to me or you are not in the mood listening to me, I want you to basically speak it out loud, that I will not be distracted. I will not be distracted. And the next thing I want you to repeat to yourself is that I will leave this call or this live stream differently. Your life will never remain the same again if you pay attention to listen to the information about it here. I will leave differently than I came. Declare to yourself. Control your atmosphere. Don't allow your atmosphere to control you. No matter how you feel right now, you have the right to control your atmosphere. I will not leave this live stream the same way again. Today, I'm teaching something very powerful, ladies and gentlemen. Now, I want you to focus very well. Every distraction that is going to try to disturb you today so that you don't receive the information you're about to receive, in the name of Jesus, that distraction will not find expression in your life. Listen to this carefully now. Today, the topic that I'm teaching is called the psychology of risk in trading. The psychology of risk in trading. The psychology of risk in trading. Today, we have a lot of work to do. You're going to be taking a lot of notes. So make sure you have space in your book or your tablet or your iPad. The psychology of risk in trading. The psychology of risk in trading. I wrote down something here and I want you guys to write it down before we even go on today. The psychology of risk in trading. The first thing I want you to write down today is that risk isn't just about the money. Risk isn't just about the money. Risk isn't just about the money. It's about how your mind process uncertainty, your emotions, and what's on the line. I'm going to repeat it again, don't worry. Risk isn't just about the money. It's about how your mind processes uncertainty, your emotions, and what's on the line. What are we talking about today? Psychology of risk in trading. Psychology of risk in trading. My purpose of today's stream is to make sure you leave this call and you rethink the way you see risk. Number one. And number two, you get to understand your risk tolerance. And number three, you get to understand how to apply proper risk management in trading. What did I say? My goal is to let you see risk in a different way. Then number two is to let you know how to identify your risk tolerance. And then number three, how to apply proper risk management in trading. All right. If you guys are ready for us to dive in and learn deeply in today's lesson, I want you to drop some number ones in the chat. Okay. Before we can be able to understand what risk actually means, there are two things I want to explain very well today. I want to explain the term uncertainty. I want to explain the term uncertainty. The term uncertainty, I told you are going to be writing a lot of notes. So because this is about risk management. It's about facts. It's not about opinions. So please be writing things down. Uncertainty is the state of having incomplete knowledge about an outcome. Uncertainty is the state of having incomplete knowledge about an outcome. Uncertainty is a state of having incomplete knowledge about an outcome. Uncertainty is the state of having incomplete knowledge about an outcome. Do you have that down? Uncertainty is a state of having incomplete knowledge about an outcome. Why do I want you to understand this first? Because in order for you to be able to understand risk, what did I tell you? I said risk isn't just about money. It's about your mind, the way it processes uncertainty, your emotions, and what's on the line. And so the first thing you need to be able to understand before we talk about risk in a deeper level is that you need to be able to understand when we say the word uncertainty, what does that mean? Uncertainty is the state of having incomplete knowledge. Listen to me, ladies and gentlemen. Incomplete knowledge is not absence of knowledge. Incomplete knowledge is not ignorance. Incomplete knowledge means you have some pieces of information, but it's incomplete. It has gaps in it. So, for example, let's say tomorrow is not promised for everyone. Is that true? But it doesn't mean that the individual does not wake up hoping they will leave tomorrow. The person that knows that complete knowledge is God. Are you with me? So it's not certain. It's not a certainty concept. There is an uncertainty in there. So uncertainty is not lack of knowledge. There is knowledge there, but it's incomplete. Are you with me? And so that is the first thing I want you to understand. Now we have two types of uncertainties. We have random uncertainty. It is a kind of uncertainty you call chance-based uncertainty. One of them is you tossing the coin and so on and so forth. It's random. You don't know when it will happen. You don't know when this will happen and so on and so forth. Then we have the second type of uncertainty called the knowledge uncertainty, meaning that the information you have is not complete. So random uncertainty and then knowledge uncertainty. Are you with me? Then the next thing I want you to understand after you have been able to get the idea of what uncertainty is probability. What is probability? It is the measure of how likely an outcome is to occur. How likely an outcome is supposed to be occurring, right? So let's say, for example, we have something called the theoretical probability. Let's say you pick a dice. I don't have a dice here, or a coin, whatever. If you roll the dice, in terms of theory, it has 6 portions of the dice. It must end at a certain portion, either 1, 2, 3, 4, 5, 6. So it means that if you roll this dice, the chances that it will fall at 6 has a probability. 4, it has it as well. 5, so it's different types of probabilities. Does that make sense? So we have different types. So now when you bring uncertainty and probability together, what does that mean? It means that risk is what happens when uncertainty and probability meet in action. Are you with me now? Don't worry. We are now starting. Just make sure you're writing the notes down. Today you will understand the real meaning of risk in trading. So, number 1, we started by saying that risk is not just about money. And I went on by telling you that we have something called uncertainty. It means the knowledge or the information you have is incomplete. No man can be able to predict something with certainty, especially when it has to do with the future outcome. Then we have what we call probability, that it is the measure of how likely an outcome is supposed to be. So, for example, if I toss a coin, the outcome or the likelihood of that coin being head or tails is 0.5, meaning it's 50-50. Because in terms of probabilities, we measure it by 3 digits, 0, 0.5, and then 1. So in order for us to get head, is 50-50. In order for us to get tails, is 50-50. But there is a chance that we may get 49 heads, okay? And we might get 51 tails. Or we might get 40 heads, 60 tails. That is the probabilistic number. Are you with me? So when we now talk about risk, that means we are talking about an uncertain time or moment, meaning that the information you have is incomplete. That means you don't know what could still happen regardless of the knowledge you have. And you don't even know when they will be happening. So it summarizes your action as a risk. But that alone does not make it risky. That is why some people trade well when you are in a demo account. Even though you are practicing with a demo account and there is somehow risk involved, the risk does not affect you. So it's not a complete definition of risk, because if it was just about money, then you are risking a certain amount of capital that may not necessarily be yours. So money alone is not what defines risk then. Because if it was so, then the same emotions you are feeling with a $10,000 demo account should be the same in a $10,000 or $1,000 in a life account. So the reason why you are feeling it differently is because it's not just about the numbers. Something is happening to you. So that is what I said, that risk isn't just about the money. It's about how your mind processes uncertainty, your emotions, and what's on the line. What's on the line. Are you with me? So now we understand that we as retail traders, because of the information that we have, we study in concepts. We study in concepts, meaning that every single thing we are studying is a concept. That is why you will hear certain strategies called smart money concept. It's a concept. It's an idea to borrow an information to make something make sense to you, so that you can understand that the information you have will help you in terms of making a probabilistic thinking, structured decisions, but it's uncertain. So be careful. Are you with me? So you need to be able to understand that risk is bigger than you think. And today I'm going to really help you why your brain seems to still be afraid and why you still feel unfulfilled. Today you will understand very well. But I want you to stay with me. The foundation of what we are building is very, very, very important. So if you understand where we are coming from and where we are now, please drop some number ones in the chat. Number one, I am establishing the foundation for you to understand that risk isn't just about money. If it was so, it would have been easy to trade. There is something that is happening to your emotions when you are making those decisions. So that's why it's affecting your decision-making pattern. But why? Why is it like that? Because there is a moment in your decision-making every single time that comes out uncertain. So no matter every single day that you are going to keep on learning, it doesn't still change the fact that trading space is still a space of uncertainty, meaning you will never be able to know what will happen tomorrow, number one. And number two, you don't even know when it's going to happen. Are you with me? So then what is risk? Risk is the possibility, listen to this carefully now. Risk is the possibility of loss or an unfavorable outcome due to uncertainty. I wanted to bring the definitions in my own way as I was preparing this so that it will be able to make sense to you very well. Risk is the possibility of loss or an unfavorable outcome. The fact that the outcome didn't favor you does not mean that it was not an outcome. The outcome is an outcome. Does that make sense? But then the outcome didn't favor you because of uncertainty, because of an incomplete knowledge you didn't have. Are you with me? Now, I'm going to show you how uncertainty and probability is equal to risk. Number one is because you are uncertain about the outcome. Number two, you estimate the likelihood, meaning that you are saying, hey, there is a chance I will take 10 trades. Now, let me use this to make an example for you guys so that you understand very well. I'm going to share my screen and I'm going to share something with you guys. Let's say you just started trading 6 months ago and you found yourself privileged to be part of a group that sends signals. Okay. Can you guys see my screen? Thank you. I'm going to take my time because this lesson is very, very, very important. If I don't take my time to explain it to you guys and you don't get it, it will really, really pain me. Let's say your mentor is sending 10 trades this week. Okay? Please listen to this carefully now. Monday, Tuesday, word, TURS, then Friday. Okay? Now on Monday, your mentor did send, or your signal provider, or you yourself personally, you took your first trade. Now, I'm explaining randomness and the way it affects the mind. So please stay with me. I'm really praying that somebody really doesn't miss this information today because it is an answer to your question. Listen to me carefully, please. Number one, 2 trades was sent to you. These 2 trades, one hit TP2, which is, let's say, 100 pips. And the other hit stop loss. Now, the first TP1 or TP2 may have happened in London session, and then New York session was stop loss hit. So let's say stop loss of, let's say, 30 pips. Okay? Now listen to me carefully now. Let's say for some weird reason, you missed TP2, or to make it even much more painful, you took TP1 and you made small money and the trade went to hit TP2, and so you didn't take TP2. So you got only, let's say, 50 pips. All right, that means you. So let me just bring this one also here as well. So let's say you only got TP1. So that is Monday results for you. Okay? Tuesday, stop loss hits. Your mentor was able to stop a good loss. Stop loss hit with 50 pips. Now, the results over here and your results over here is not the same because you only took TP2. Sorry, you only took TP1. The group did TP 200 pips and hit a stop loss of, let's say, 30 pips. So you see that now. Now you hit 50 pips. And so at the end of the day, you are either back to break even or probably you over leverage, so you are losing more money. Now, Wednesday, no trace won. It was a break even. Thursday, it hit stop loss twice on Thursday. Then on Friday, 2 trays were sent. 100 pips for first trade and 240 for this trade. Now, this is what is happening to a lot of people. Monday gave you emotions. Tuesday gave you emotions. Wednesday, you were already irritated. Thursday, you are hitting 2 stop losses in a row. So Friday, you didn't take the trade. All right? But then on Friday, the group did 340 pips. Just on Friday. Now, the reality is, the group or the mentor may be saying that this is the amount of money that they are making in that week, but it doesn't reflect in your account. So what I'm trying to let you understand here is that the same way it happened on Friday is the same way this good trades can happen on Tuesday. Is the same way these good trades can happen on Thursday, and it can be randomized. Does that make sense? So the ability for you to be able to understand that this is the reality of trading is where a lot of people are finding it difficult to understand. So your last week results may not be the next week results. Your next week results may not be the same as your even next month results. Your next month results may not be your next 3 months results. Even if it's the same, it will not be the same day, same month, same week. It wouldn't be the same. It's full of randomness. Are you with me? And so because of that, you need to be able to understand the emotions behind that, consistency in proper risk management, and knowing that the industry that we are in is a game of probabilities. I wanted to basically just establish this point so that you will understand that, so that is why I feel the way you feel. Yes, that is true. That is why. But there is a way around this. Are you with me? That is what I want to show you right now. So I want you to keep this analogy in your head. Are you okay with me? Okay. Now let's continue. Let me stop sharing my screen. Now that you understand the randomness that I'm trying to show you now, that means let's settle the case that trading is full of risk and it is risky. And at the end of the day, you can't do anything about proper risk management because you don't even know what is on the line that you may not like is going to happen to you. I want us to establish that for sure. Now that you understand this, we are now about to really talk about the psychology behind risk. Why risk feels so intense? Why? Why is it that you would tell yourself, okay, I'm going to do X, Y, Z, and sometimes you find yourself not doing it? Why? Today we're going to be talking about this very well. It is very important to understand this. So if my foundational information that I'm trying to give it to you guys has made sense and we can go to the next level, please drop some number ones in the chat for me. Now I'm about to really start teaching, so please pay attention. The psychology behind risk and why it feels so intense. Listen, your brain, let me check the comments. Okay, good. Your brain is designed to avoid risk. Not because you don't like risk. Your brain does not like uncertainty. Human beings love to be in control. We love to be in control. We love to know what will happen before we do something. And so every single time that your brain is experiencing uncertainty, it either avoids it or it tries to be in control so much it ends up turning into an error action. Are you with me? And so number one is because your brain likes to avoid danger. It doesn't like probabilities. Your brain likes assurance. Number two, you guys may have heard me teach this before on the masterclass or even on one of the videos that we call something the amygdala. The amygdala is what is responsible for emotions. So when you experience that signal illustration I showed you guys, it is your amygdala that is processing that emotions to save them, to remind you what happened last week. And that will now affect your risk next week. It's your amygdala. Number three, you feel fear, anxiety, and urgency, or even recklessness. Because why? Because at the end of the day, your brain really doesn't like the idea of losing. So let me tell you something again. Let's say you are somebody right now that somebody has given you money to trade for them. Listen to this carefully now. Let's say you don't have the capital. So you borrowed the capital to trade for this individual. Or you are using capital that is not meant to be used for trading. What is going to happen is you are not risking the money per se. You are now risking friendship. You are now risking respect. You are now risking dignity. So even though you know, according to your strategy, this trade will go there, in your mind, that moment, it is not the money that is on the line. Remember the definition I gave you guys. I said risk. What did I say? I said risk isn't just about the money. It's about how your mind processes uncertainty, your emotions, and what's on the line. So some of you guys, sometimes you are not trading money necessarily. You borrowed the money from a friend. So now the minute you enter the trade and it's going against you, it is not the money you are afraid of. It is that friend who is going to say, wow, I trusted you. I believed you. You told me you were a good trader. That respect, that dignity is what is on the line. Are you with me? So even though, yes, you are trading money, but risk isn't just about money. If it was so, then you could make it back. If it was so, it may look like it's about the money, but it's really not about the money. It's about things about the money. So if you pick up a single mom who is trying to make it in Forex so that she can take care of the family, that single mom may look like, oh man, I am afraid, what if I lose this money? That single mom is not necessarily thinking about the money. She's thinking about the children, the hunger that will happen to those kids if that money is gone. So the children's life is on the line. Are you with me? So if you don't understand this, you will not be able to understand risk tolerance, because a lot of people think when we say, how much are you willing to lose? They think, oh man, I'm willing to lose. No. What's on the line? School fees, rent, dignity, risk, the psychology of risk. Some of you guys right now, it's possible that you have blown your uncle's friend money, or you've blown some money you were supposed to use to pay school fees. So what is on the line is your parents or your caretaker finding out that you were reckless. So that is on the line. Or maybe you promised somebody you were going to do something, and so that is on the line. Are you with me? It is very important that you understand this foundation. If you don't understand, you will think the reason why you are afraid, what if I lose the money? And I ask you, why are you afraid? Because I don't want to lose the money. No. Because you don't want to lose respect. Because you don't want to lose your dignity. You have told somebody you are the new age Warren Buffett. So if you lose this money, your dignity is on the line. You are afraid. It doesn't matter. You can disagree. But this is the psychology of risk. I'm trying to let you understand carefully now. So number one, you need to be able to understand that these emotions can never be going away if you don't understand the real nature of that. So now the next thing I want to talk about is that there are two things you can use to determine your risk tolerance. Two things. Number one is emotional risk tolerance, and number two is financial risk tolerance. If you guys are learning, drop some number ones in the chat. Are you guys learning? If you guys, let me just go into the comments a little bit. When I'm teaching like this, I don't get to see the comment section. That is why sometimes when you put comments in, I don't see it. I'm really laser focused. I really want you guys to get it. If you guys are learning, drop some number ones in the chat. Please, I really want somebody not to leave this call the same way again. Are you with me? Please, listen. Okay, I want to share my screen and show you something again. Listen to me carefully now. You will never leave this call the same way again. Listen to this carefully. Okay. So let's say right now on this live stream, you are listening to me. All you have is $1,000. And you're about to start learning how to trade. If all you have is $1,000. You may have heard me say this before, that the financial markets is not a place where we go to make money. Let me write it boldly. The financial market, some people will not like this comment. The financial market is not, but I genuinely you guys should know me by now. I will rather choose to tell you the truth than to say something that will make you like me. The financial market is not a place. The financial market, before I even tell you guys this, I'll never forget. Before I continue writing this, I'll never forget. In my career, once upon a time, one of the reasons why I became so angry in 2015 that I told myself I will either quit trading or trading must work for me. In 2014, thereabout, a friend of mine trusted me because I told him, man, I've cracked the code. You know, and many mentors will not tell you this because they are shy. I told my friend, I've cracked the code. He said, really? I said, yes, 2014. And he went and told his uncle, I have a friend. He can make money in the financial market. And so he borrowed money from the uncle to bring so that we can trade. And I will never forget. During that time, I was going to write my physiology examination. Or was it then? I think it was an exam. Yeah. One of these exams, something like that. Then the account was in a drawdown. In fact, the account blew. In fact, let me, it's on my Instagram, but let me tell you guys, it was $8,000. And the account blew so much that when I saw the drawdown, there was this heat. Yeah? This heat. There was a heat. It was physical heat. I felt physical heat coming on at the top of my head. I felt the heat coming on at the top of this head here. And I didn't know what to tell my friend. My friend didn't know what to tell the uncle. And that moment I knew, listen guys, this industry is not a joke. If you are not there yet, you are not there yet. There is no shame about it. If you are not there yet, you are not there yet. If you don't have the knowledge, you don't have the knowledge. And when I blew this money, just blowing that money alone made me lose appetite. I always tell people this. If you have not lost appetite because you had a bad trading day before, believe me, you have not experienced the real emotional roller coaster of trading. To the point where you will see your favorite food and you can't eat. That is trading. And so for me, I learned the hard way. I came to the point where I told myself, listen, I don't want the here's how you can flip $100 to $1 million. That I don't want that nonsense. I told myself it's not about gambling. It's not about none of that. You either become serious with trading, or trading will discipline you. You will lose your money. You will lose a friend money. You will lose the things that you're not supposed to touch. You will lose it all if you're not serious about trading. Trading is a serious business. And so what I'm about to say, listen to this carefully now. The financial market is not a place to make money. I'm sorry. It's a place you go. It's a place you go to multiply money. So that means you cannot multiply what you don't have. You can't multiply what you don't have. If your last money on you is $1,000 and you want to use that $1,000 to become financially free so that you can be able to solve your problems, there is no magic around that. You will panic. You will be emotional. I'm sorry, ladies and gentlemen. If $100 is all that you have, there is no magic around it. If you want to flip it to 1,000, you must be willing to blow it. You must be willing to blow the money. If you want to flip 100 to 1,000. But if you want to make big money and risk small, logically, mathematically, it doesn't make sense. So if $1,000 is all that you have, $1,000 is all that you have. Listen to me, ladies and gentlemen. Don't deposit this money into your account and go beg for a course. Listen. Don't deposit the $1,000 into your account and go beg for a course or go use free trading view plan. I know people are going to fight me on this. Listen, this $1,000 is not just for your deposit. This $1,000 is for your subscriptions, it's for your education, it's for your deposit, and it's also for some things that will make you feel well. If $1,000 is all that you have, that all the $1,000 doesn't have to go into your broker account. No, here has to also have TradingView subscription. Why? How can you do back testing if your TradingView does not have a pro? Unfortunately, they charge for that because the TradingView Pro is the only one that you can do in internal and intraday back testing of playing the candlestick. If you're using the free version, it's only daily. And it's going to be very difficult for you to be able to understand. So TradingView money must come from this. Are you understanding me? Your capital for the future that you will deposit will come later. But education must come from this because some of you may not have the privilege to learn from somebody for free. And if you want to go on YouTube, the body of knowledge is scattered. So you must pay somebody, either your mentor that you found around your neighborhood or your local area. If you know he's good, at least pay him something small and let him teach you something. It may cost you 100, 200, I don't know. Are you with me? So this is what we call capital management, ladies and gentlemen. That is all that I'm trying to say. This is called capital management this year. It's called capital management. It is the ability for you to be able to understand what you have, home and abroad, all that you have. This is it. If this is all that you have, and you put $1,000 in the account, you are in trouble. You are in trouble. You will be emotional. There is nothing you can do about it. So let's say after you have done all the things you've done, is remaining $400. Now, if all that you have is $400 after learning, after doing every single thing, and it's left with $400, it's all that you have in your life, but you still want to be a hustler, not in a negative way, but you still want to be sacrifice. Ladies and gentlemen, don't put all the $400 in there. Put at least $300. Okay? Cliff, what is the remaining $100 for? For yourself. You have to eat so that you don't have to put pressure on the account so that you can be able to buy food. So the $100 is for your tummy so that you can be drinking water, eating well, so that you can think well. So you see, a lot of people will now sacrifice and put all the $1,000 in their broker account, and now they're emotional and they are saying that, Cliff, I don't know why I'm being emotional. It's not magic. It's not magic. because we call something issues of life. If your landlord is knocking on your door, it is reality. He will kick you out if you can't pay. So emotionally, you are affected. If you are owing somebody and they are asking you to pay that debt, it's realities of life. Either you convince that person to give you time or you give the money to the person. If you force and you want to flip the money quickly to give it to the person, you will blow it. Are you with me? This is reality, ladies and gentlemen. I'm trying to let you understand your risk tolerance. So your risk tolerance, meaning risk you can tolerate, is any risk that whatever is on the line does not affect you emotionally. So if you think it's only just $100, that will not let you care about the capital the same way as a demo account, then that is all that it is. But I'm about to teach you something very powerful. That is why a lot of people still don't grow. Listen to me carefully now. I'm about to show you something very, very, very powerful. That will really let you go like, oh, it makes sense. So let's say, for example, you start with $100. And then this $100, you have been able to grow it to $400. Now the emotions that took the $100 to the $400, it's not the same emotions that can take it from $400 to $1,000, especially if your financial thermostat is low. So some of you guys are here, you don't have any problem flipping 100 to 200, 100% winning ratio. 100% growth. You don't have any problem flipping 100 to 200. That is 100% growth. But when you are when it comes to 200 upwards going, now you are emotionally attached because now you are starting to believe, oh my God, I'm about to hit the amount that I need. Oh my God. Then now you start to trade with emotions. So risk management is not only how you start, is that while you are going forward, you need to still see the same amount of growth, just like how you started when you were okay with a little capital. Because when you grow it from 100 to 1,000, it's not the same emotions anymore. If your financial thermostat is $100, every single thing will work against you to bring the account back to $100. If this is your reality that I'm describing right now, put number ones in the chat. I'm very passionate about this topic because somebody needs to hear me clearly now. That you think because you are now good in trading and you think you deposited 100 and you are going to 1,000, you can be able to grow the 1,000 to 10,000. You are joking, because remember, it's a numbers game. 1,000 to 10,000, you're going to start risking differently. 10,000 to 100,000, you need to be ready to lose more to make more. If your risk tolerance, if you cannot tolerate that risk, you are in trouble. You will always go. So I'm now describing to you guys why you keep on going up and coming down. You're like, I don't know why. I make money and I come back again, because your risk tolerance is a capacity business. If it is $100, you need to expand it while you are growing. That means you need to reach a point whereby you are okay with the risk, depending on your life situations and the emotions attached to it. So if you're asking me, Cliff, why is it that I grow an account and I come back again? Because you cannot tolerate certain risk. You are not there yet. Are you with me? You are not there yet. So this is what we are talking now, is emotional tolerance. It is a type of tolerance that happens to you based on the emotions you have towards that money. Right now, I can go to a restaurant and I will spend some certain amount of money. I can't. And there are days when I go back home, same amount of money I spend in Dubai, I go back home and I convert it and I panic because everybody else around me is, are you spending this in a restaurant? And I'm like, yeah. The reason why they are panicking for me is because they are converting the money from my card to the local currency. Are you with me? How many of you guys have traveled before? And especially when you go to any other location, you start to convert and you're like, wow. You start to feel different emotions towards the conversion rate because you took it to the country money that you can feel. So I used to tell people all the time that if you are somebody that you are not there yet in terms of conversion understanding, it's better you trade in your local currency. I know. Especially brokers like, I'm not going to mention any name because of compliance reasons. I don't have any affiliation with anybody. But there are brokers that naturally they allow you to trade in their currency first. You can trade in your currency. So now you understand, if you are somebody that you are used to spending Naira and you can understand Naira emotions, trade in Naira. It's okay for now. Don't quickly rush and trade in dollars because maybe emotionally you are not there yet. So risk tolerance in terms of emotions is how you feel when you think about the money. It's very important you understand this. And then financial tolerance in terms of risk tolerance identification depends on the factual aspects of your pocket. If you don't have it, you don't have it. Cut your coat according to your size. If you don't have it, you don't have it. There is nothing anybody can do about that. You don't have it, it's okay. That is what I was showing you earlier. So if $500 is all that you have, that is the reality. If you try to get more extra money, that is not yours, and you are borrowing it, it may not be bad, but the truth of the matter is you will now start trading the emotions of the individual. So there are some of you guys right now here listening to me. You are not even trading the market. You are not even trading the numbers. You are trading emotions of people as well as your issues of life. So even though you know this market will go to this direction, you don't have the peace to wait. That is why sometimes when the market goes to the direction, you know you're supposed to stay in. It will go to 200 pips, but you will still cut that 50 pips because you are afraid. What if it reverses? And it could, but you're supposed to be free to let it flow. People sometimes ask me, Cliff, what about we that we like breaking even? I said, when it comes to risk conversation, whether you break even or you don't break even, that is not the problem. Can you do it consistently? Because listen to this carefully now. There are days that a break even is a trade going to $50 and coming to break even. But the more your income is growing, there is a day it will go to 18,000 and come back to break even. Can you handle that? Are you with me? So when it comes to risk, it is subjective. It grows. So if we are talking about risk and I'm risking 3% on top of 30,000, it's not the same as you risking 3%. Let's say, for example, I'm risking 1,000 on top of 10,000, and you are risking, let's say 1,000 on top of 1,000. It's not the same risk in terms of percentage. Are you with me? So our emotions won't be the same, but monetary-wise, it may feel like it's the same, but it's not. So you need to be able to understand, Cliff. So how do I identify my risk tolerance? It's quite very simple. How much do you have in your bank account? If it's $50 and you put all of that in there, you will panic because you don't have the money. This one is not about psychology. It's not about the study of mind and behavior. This is about the study of life. If $50 is all that you have, that is all that you have. I'm sorry, but I cannot lie to you. Let me tell you something. This information that I'm telling you guys here, right? Listen to me. When I was consulting the people in the accountability program in the TP family, I told them something. I said, look, imagine you guys come to me right now, and then the person tells me he wants to play football, but the person doesn't have legs, unfortunately, meaning that the person is either deformed or one accident made the individual lose their legs. And you come in and you are looking at me, and I'm basically just motivating the individual. Don't worry, you can do it. You can be like Cristiano Ronaldo. No, the person cannot be like Cristiano Ronaldo. Unfortunately, in the condition he's in, the possibility is not there. So me standing on top of this person, motivating the person, it's not possible for the person to become like Cristiano Ronaldo because they don't even have legs in the first place. Are you with me? So there are certain things. It's like trying to become an editor. You know what you guys are seeing before I got myself team and every single thing, and they are helping me to create all these content that we make. I used to edit my own content. A lot of people don't know this. But this is the funny thing. When you start editing videos, you will start to know that even if you are talented, your device play an important role. Are you with me? No matter how talented you are as an editor, there are some videos and there are some effects. No matter how good you are, you can't edit them if your device is not up to date of a proper memory. Same thing in trading. No matter how good you are, there is a reality check in the tools you need to survive. One of them is money. If you don't have it, you can't multiply it. Cliff, then what do? Common sense. Nothing. You either wait until you get money while you are learning the skill sets and you multiply it one day. If you have it now, multiply it. But as well as you thinking there is a magic around me to say something and then it will help you to be able to just not be emotional and risk all your $1,000, I am being wicked to you. You need to understand. Don't put all the $1,000 in there. Now you understand me, right? So now that you understand risk tolerance, Are you guys with me? I know that it's a little bit, I'm being very aggressive this evening because risk is everything. It's everything. It's everything when it comes to making money. Yes, last week we studied about how to survive and we spoke about psychology. Today we are speaking about the psychology behind risk. That means you need to also understand that there are some certain things that you need to get. There is no way around it except the reality check. So I'm sorry, let me apologize. If let's say this is your first time, you're like, why is this guy so passionate? Because it pains me when I hear people saying, Cliff, I've lost all my money. It wasn't supposed to be so, but you believed so because of the 5 stages in the beginning. I started telling you, unconscious incompetence. You believed so, not just you. I believed it too. And I lost money. I lost other people's money as well in the beginning. That was not supposed to be so. Good news is they forgave me in 2014. They forgave me. Some of you guys, somebody may not forgive you. He may be chasing you still till now, and you cannot afford that. So reality check, risk tolerance, financial tolerance, emotional tolerance. Are you with me? Now that you understand this, the next thing that we have to understand right now is that what are some of the cognitive biases that distort risk perception? You see, ladies and gentlemen, if you don't solve your risk tolerance problem, I wrote down here, there are 1, 2, 3, 4, 5 cognitive biases that can be able to hurt you in your trading career. Does that make sense? Sorry. In your trading career. Do you get it? Now, before I talk about that, I want to explain something for you guys to understand. People may ask me, Cliff, so does it mean that trading is gambling? No. Why? Because trading is a body of knowledge. It may not be certain, but there is an information. I want to show you guys something right now and show you something. I want to give you a concept. What is this? What is this? Can you guys define what this is? What is this? Just look at my hand. What is this? Can I get the answers in the comment section, please? What is this? What is this? What is this? What am I showing you guys here? What is this? 1. Okay. Is it 1? Is it 1? Okay, cool. Now listen to me, ladies and gentlemen. You see, whatever that you are telling me this is, you are not right and you are not wrong. Listen to me carefully now. Somebody said a finger. The person is not right and he's not wrong. It is going to depend on the answer I tell you I'm thinking. When I did this, I'm pointing at the sky. When I did that, I was showing you the ceiling. I was like pointing to the ceiling. So I showed you this. I said I'm pointing at the ceiling. I showed you this. You can tell me you are pointing to the ceiling twice, or I can tell you it's 2. And I can do this and you can tell me it's 3. And I'm like, no, I'm now basically just showing you that I have only $3. Whatever I am telling you, I am making you understand that there is an error in the way that you think. So when you come on this live stream right now, or you go into the financial market, in order for you to be able to study a pattern and predict the chances of you being correct, the first thing you need to allow yourself to be able to start to understand risk is for you to agree that you are going to be wrong many times. You are going to be, see, when we talk about pattern is about you being wrong many times. Are you guys with me? Pattern studying is about you being wrong many times. The moment you start learning how to trade and your goal is to be right, you're already defeated. That mindset alone is a defeated mindset. In trading, for retail traders, you need to be ready to be wrong. As many times as you can be wrong is how much closer you are to be right. That is what we call back testing. So when you now back test and you now understand your edge to be able to be above how many times you can speculate, the number of times something should happen in a random moment, you are now applying proper risk management when you attach it to numbers. Now, the reason why I said this is because of this. Listen to me carefully now. A lot of people don't want to be wrong. That is the first problem of the cognitive biases. They don't want to be wrong. The first one is called confirmation bias. If you are scared to be wrong, you are in trouble. You are in trouble in trading. Confirmation bias, you may have heard me say this before. It is when you come to me and you tell me, Cliff, do you think gold is going to buy? You see, there is a beautiful story in the trading in the zones. Beautiful story. There was a very good technical analyst that went to one investor who was investing in soya beans. And so when this technical analyst expert went to the soya bean, in fact, he was talking to a friend who knows the investor. And he told a friend, I think soya bean is going to basically do XYZ. And he asked him based on what? And he said, I think it's going to do blah, 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 based on these key levels. And then the guy said, are you sure? He said, yes. He says, what makes you think so? He says, because I have analyzed the market so well that I know exactly what it will do. And then the soya bean investor said, that investor is not just a soya bean investor. That investor said, that is, excuse me for the words he used. He said, that is BS. He said, it's not possible. And then the guy said, no, it's possible. So when it got to this direction, the soya bean, the technical analyst guy said, I told you this is the key level. So it started reversing a little bit. Then the investor picked up the call, and then he said they should sell him extra bushels of soya beans. Then what happened next was the market started dropping more. The market started dropping more. Now listen to me. The trader wasn't wrong. It's just that there is uncertain movement in the industry. As a retail trader, you can't do anything about it. Now, if you are wrong like this, and your stop loss is meant to be here, and then you remove your stop loss, the second cognitive bias affecting your risk. Remember, you wanted to lose how much? $50. You wanted to lose $50. Now the stop loss is about to get hit. Now you removed the stop loss because you don't want to get hit, because you have entered into what? What type of cognitive bias is that? TP family, don't fail me now. If you remove your stop loss, what type of psychological name is given to that type of cognitive bias? Can somebody tell me? Somebody should make me proud. I want to know that TP family, you guys are really learning trading psychology. Somebody should make me proud. If you remove your stop loss, what is the name? Loss aversion, loss aversion, loss aversion. It is loss aversion is the type of cognitive bias whereby your tendency of not wanting to lose is greater than your desire to gain. Are you with me? So even though you know, even if you are wrong with the amount of money you said you are risking, even though you said you are okay with it, you still don't want to lose the 50, because it is much more painful to you to lose the 50, even though you know you can make 100 back. So one of the things I hate seeing retail traders say is that my risk to reward ratio is 1:10. If you say your risk to reward ratio is 1:10, what you are basically saying is you are okay even if you lose 4 trades in a row. So I hate it when a retail trader loses 3 times in a row, even though they said their risk reward ratio is 1:10, and they are still angry. Why are you angry? If truly your RRR is 1:10, that means you can make the money back, even if you hit 2-3 stop losses in a row. Are you with me? So you remove your stop loss. First cognitive bias, loss aversion. Second cognitive bias is you are now going to go and call Kema. Kema, I think gold will buy. What is the name of that cognitive bias? You call Kema. Kema, please, bro, I think gold will buy. Don't you think? Kema is like, I don't see it. I don't see it. So loss aversion has moved to what we call confirmation bias. You are now trying to confirm a bias from Kema, even though it may not be true. You just want something that will give you self-gratification in that moment to sleep at night. Then confirmation bias will go into anchoring bias. You are now going to be hooked on to an idea that the market must do something for you. It's not true. Ladies and gentlemen, if you don't understand this concept, nothing will change in your trading. I'm so sorry, guys. I know that you guys were trying to tell me you didn't see. Let me share my screen back again. So your stop loss is here. You said this is your stop loss. You are going to lose only $50. It got to your stop loss, and then you remove the stop loss because you don't want to lose the $50. And then you kept on holding on to it. The market is still dipping. The market is still dipping. The market is still dipping. What happened next? What happened next was now you are panicking. You are calling Kema. You are trying to even message Cliff to find out if gold will buy. I don't know. I have not checked the market yet. It may buy, it may not buy. I don't know. Let's know. I know even if it's an uptrend, I don't know where it wants to reverse. Nobody knows. It's uncertain. But risk management is going to help us, right? These are the type of cognitive biases that affect you during risk management. So how then do you fix this? Number one of the most powerful practice I will tell you is called set and forget. This one is not rocket science. Set and forget. Set the stop loss, set your take profit, and let the trade play out. But you see, you can only let the trade play out when the lot size you used makes sense. If you have $1,000 account and you are risking 0.01, there is no amount of a trade that will let you panic. No amount. You will not panic. But if it's 1.00, you will panic. Because 1.00, when it moves 100 pips, you know with gold, it can move 100 pips. That is $1,000. Your whole money is gone. Are you with me? Your whole money is gone. So these are the few types of cognitive biases that affect your trading. Now, before we talk about the last part of the information of Cliff, then how then do I risk? I want us to listen to this, then we'll take it out from there. All right? We're going to take a 1-minute break, come back. I want you guys to soak in. Now, I want you to listen to this affirmation very well before we come back. Okay?
I think big, I dream big, I trade smart. My thoughts align with wealth, success, and abundance. I deserve success because I work for it and stay disciplined. I let it go of doubt. I let go of fear. My mind is renewed every day with wisdom and strength. I focus on solutions, not problems. I attract profitable trades and opportunities. I am a successful, focused, and profitable trader. I am unstoppable and I am victorious. I am grateful for every opportunity to trade and grow. I give thanks for my progress, my lessons, and my success. I attract prosperity and I steward it wisely. Every day, I am becoming a better trader. My trading provides freedom and abundance. I speak life, blessings, and success into my trading journey. I am grateful for the wisdom to manage risk and profit. I celebrate my growth and resilience. My heart is full of gratitude. My mind is at peace. I am prosperous in my thoughts, my trades, and my life. I think big.
So one of the things that I want you guys to understand is this. There is a reason why I play this. You see, when you are about to go into the market, listen to this carefully now. There is something called risk alignment. That is the next thing I want to talk about, risk alignment. Risk alignment is when you lose the money in your heart before you go into the market. If the only thing you get from this call or this live stream is this, I'm okay with it. You have to be okay with losing that money before you go into the market. Meaning that you're going to tell yourself, okay, you know what? At the end of the day, I'm trying to risk only $50 today. And I'm okay losing this $50. And so when you wake up, before you go into the market, you tell yourself things like, a stop loss is a stop trade. 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 Now, ladies and gentlemen, what you are doing right here is that I always tell people this, that when it comes to the psychology of risk in trading, I'm wrapping up now, so listen to this carefully now. There are 3 types of risk management in trading, or in other words, managing risk in trading. Number 1 is what we call capital management. We already spoke about it. If you understand capital management, please drop some number ones in the chat. Let me understand. We spoke about it already. That you don't put all the money you have. You put money that you are willing to lose, right? That emotion you're not attached. Number two is the risk. We now understand that because you don't know when the losses will happen and so on and so forth, you need to be able to make peace with the reality check of trading. It solves the risk management psychological aspect part of trading. The last type of management is what we call the U type of management. The U type of management is a type of management that you have to put yourself in a routine. You need to put yourself in a routine. You need to put yourself in a routine. You need to put yourself in a routine. For example, the people that they are in the TP accountability program, whatever program, listen to this carefully now. I was explaining something to them and I want to share something with you guys. When we talk about the U management, this is what people don't understand. The U management is a series of activities you involve yourself in so that those activities will manage you. So this is an example of a calendar I created for the accountability people. And very soon, some of you, in fact, all of you guys will get a calendar from the TP family anyway. So don't worry about it. So every single trading day, this is how it looks like. 6 a.m. is a mindset reset. So mindset reset, what do? 10 minutes before or after you wake up, after you have done your prayers and every single thing, you need to practice 4-7-8 breathing technique. So 6 a.m. here is UK time. Everything is in the UK time zone. So 4-7-8 breathing technique. What are you doing that for? Is to make sure oxygen circulates in your brain very well so that you don't feel exhausted, mentally tired, and so on and so forth. Are you with me? You can take a screenshot of this if you want. Take a picture, whatever, let me know. Then it goes all the way to everything here. Then we have landing session. Here you are actually really trading. Then we have after landing session. Then we have before New York session. Then we have New York session. Then we have after trading day routine. This routine is supposed to be able to manage you. Let me open it again. And then this. And then this. And then that. And then this. And then that. So imagine you getting notifications every single day to follow a single routine. Because you see, when you work and you have a job, somebody else is managing you. But in trading, you're going to manage yourself. So the next thing I want to talk about, I'm introducing to you the U management in trading. That is the part 2 of the psychology of risk. Because guys, look, we can't stay here throughout the whole night. So I need to introduce the topics to you step by step. So the part 2 will be the U management in trading. It is you're going to learn how to manage you so that you can reorganize your mind, reset your mind. You will now get to understand the practical reason behind journaling. It is in psychology of risk in trading is whereby I will show you guys journal. How do you journal? What do you even use that journal for? What is it for? So today, the goal was to introduce you guys to the psychology of risk in trading. Then we are going to break them down. But I needed to establish this foundation. So we will go to the U management in trading. Then we will now actually talk about the capital management in terms of lot sizes and the risk tolerance behind it. So you can be able to know how to increase your financial thermostat. Ladies and gentlemen, some of you guys right now, no matter how good you are, your problem is not the skill set of buying and selling. You have a problem in scalability. You know that you are stuck. You want to break $5,000, level, but you are still stuck in there. There is a reason for that. In this world, everyone is where they are because of what they don't know. Believe me, ladies and gentlemen, I will share some of my stories, how I broke some certain ceilings. There is a reason why I am not a billionaire yet. You're right. There is a reason why I don't have billions of dollars. It is common sense, meaning that I have not reached a certain point of knowledge. Does that make sense? And so you need to be able to understand that in reality, in the context of trying to make money in this industry, your trading life and your actual life, they mirror each other. So if you have a bad risk management in your actual life, just like how the book was talking about today, it will reflect in your trading life. I don't want to keep you guys for too long today. I want you guys to understand that next week's session, God willing, about the you part of the management may be what some of you guys may be looking for. And also a quick announcement. I have an amazing video that's going to teach you guys a lot about understanding the summary of trading psychology, dropping soon. So let's see how it goes. I don't want to keep you guys for too long. I really have a lot of things I want to teach you guys, but sometimes time doesn't permit us. And when I'm living like this, I'm a little bit sad because I can teach and teach and teach because I want you guys to get a full information. But listen to me carefully now. No matter how many information I release today, it takes time to grow. So let us be able to just make sure, just be patient with me. Keep on listening to the master classes, keep on learning, and you'll be growing. Does that make sense? And so today, if you didn't get anything from this call today, I want you to understand this, that risk is not just about money. Risk is about how your mind process that moment, the emotions towards it, and then what is underlying. Some of you guys right now need to go and reorder your risk tolerance because you are making decisions out of emotions based on the money you are even trading with. It may not be yours. And so because of that, anytime you put a trade in there, you are panicking. Cliff, what do I do about that? That is a question I cannot answer for you. But I need to tell you the reality of where your emotional problem is coming from. It may not all the time be because you have bad habits. Sometimes it may be because of issues of life. So just have mercy on yourself a little bit sometimes. Don't beat yourself up. It is not all the time that you have a problem. Sometimes it's issues of life. Does that make sense? And so next week, I will see you guys, and we are going to have an amazing time in that lesson. With that all being said, thank you so much for joining TP Masterclass. God bless you so much, and have an amazing evening. Bye-bye.
Trading is a mind game.